I think that Kevin's a brilliant guy, and I think that we'd all be very lucky to have him.
Stephen, where do you stand on?
Wow, well, Stephen Miran just gave an interview that flipped a lot of my expectations for who Miran was and what he stood for at the Federal Reserve. And I actually think that what he said is leading to some sudden bleeding in the stock market and yields rising even higher on the day since we started recovering on yields. And now they're going back up again after this Miran interview. In this, we are going to break down exactly what Miran just said. Keep in mind, the anticipation of yields going to 415 is exactly what we forecast in our alpha report, and we talked about it on Fed Day. If the Fed was neutral, Miran just added fuel to this fire, and yields, which were about 4% on Fed Day, are now at roughly 4.14, very close to exactly where we thought we were going to go. Now, we got to break down what Miran said, but I want to mention something that I think is really cool. If you were a member of the Alpha Report, you saw me yesterday morning say that Tesla was trading in no man's land and too high, and it was likely to trade down, traded straight down to 414. And if you were looking for an easy trade this morning I said, we're bouncing off 414. We could get some upside on Tesla today. And you would have been able to pick up nearly $15 on that trade. Now, some of this Miran talk and some bleed here recently, but it's still up from that line. And if you're not part of it yet, join that Alpha Report over at meetkevin.com. Yeah, coupon code Daddy's back, baby. Anyway, all right. So let's talk about what did Miran say. Miran, first of all, this guy's a lot more intelligent than I originally gave him credit for. I thought that this was going to be, your classic kind of shill that just ends up showing up at the Fed and shilling Donald Trump's, gut rates down. I thought he was going to blow up the SEP, the Summary of Economic Projections, and I thought he was going to blow up the dot plot. And he really didn't do that. I have to give him credit for that. You know me, my goal is to be hated by everyone, so I love dunking on politicians. I hate politicians. And what I found, I was actually really impressed with. And it goes to say, this is sort of a lead in to what Miran just said, but it goes to tell us that this guy's not actually trying to ruin the institution of the Fed. Yeah, he was the low dot over here. He just admitted as much. But over here, he fits really well into the rest of the dots. It's not like he's demanding zero rates and he's shilling for like mega rate cuts. He also didn't give us any kind of huge outliers in the range over here. See, I even wrote no Miran sandbag other than descent for 50. I thought this was really respectful. But what he just said in the interview on CNBC was incredible. Not only did we hear something that I thought that I was personally very impressed with.
I think that Kevin's a brilliant guy, and I think that we'd all be very lucky to have him.
Stephen, where do you stand on?
We ended up hearing his insights on how low rates should go. First, he said this, which turned markets towards the downside. We are not too far from neutral. This was a disappointment. A lot of people are hoping that the Federal Reserve is going to be there to bail us out. But the Federal Reserve is going to cut rates and sustain the euphoric end to the Nike swoosh recovery. We've been talking Nike swoosh since 2022, and we always said it would end in absolute euphoria. Now, we can't really know when that peak is until, well, frankly, hindsight. In 10 years, we'll be able to look back and go, dang, bro, look at that Nike swoosh, right? And the Nike swoosh was gorgeous. We called it for years that it's time to buy the Nike swoosh. I bought NVIDIA over here at the bottom of the Nike swoosh right here, September of 2022. It's literally the bottom of the Nike swoosh, and I still hold the damn shares right now, over 13,000 of them. That's an alert I sent out to course members when I bought it. People who bought the course back then, they're still getting alpha reports today. And when I turn around and sell NVIDIA, you'll be the first to know in the course member last year's. But anyway, the euphoric portion is that the hope is that the Federal Reserve will keep this pushing and moving for a while. Miran took a little bit of that enthusiasm away. By saying we're not too far from neutral and that growth will be better in the second half, he's actually saying, yeah, everybody thinks I'm going to be a shill for just cutting rates, but I actually think we only need 50 and maybe another 25 or so there, but that's it. Growth is going to come back. We're not too far from neutral. The risk is that the longer we stay restrictive, the greater the risk is to the labor market. So he's basically saying, look, if 3% is where we want rates to be, let's get down to 3% as soon as possible. And then let's be happy there. So get down to 3%, and unless there's a financial stability concern, we don't need to cut more. That's the argument that he's making. This idea that, hey, we don't need to necessarily cut to zero because we think growth is going to come back. We actually think that tariffs aren't hurting the economy, and that, yeah, prices can change a little bit, but it's not that big of a deal because if you think about inflation, prices change, quote, all of the time, but they're not macro significant enough to affect monetary policy. In other words, who cares? You get some tariff inflation, prices change a little bit, big deal. But don't be so restrictive that you're hurting the labor market. I have to say, I was really impressed with Miran. I really, really thought that he was just going to be a Trumpian shill and he was going to sandbag the Fed, demanding, we cut rates in some ludicrous way and that we would lose Fed independence and nobody would really trust the Fed anymore. We'd lose that trust in the Fed and actually end up having long yields go up over the long term, which would be bad. That's not what happened here. What happened here is we actually got somebody who's got an economic brain. Yeah, he's still somewhat of a shill, but he's got a brain. He's got an opinion, but his opinion isn't ludicrous. Says, look, the Fed will respond if there's a financial stability concern, but right now we just need to focus on getting towards neutral. That's probably around 3%. So we slowly get our way down there. But do we really need to go massively below that? No. Unfortunately, I think that's not what markets really wanted to hear. Now, I don't think that necessarily means, the Qs aren't going to go over 600. I don't actually think this is like mega bearish. I'm actually short-term quite bullish because there are really no catalysts between now and the beginning of October. In fact, one of the calls that we just recently made in the course member stream was that Palantir would go back over 180 pretty rapidly. And in the last 2 days, Palantir has literally gone up like $15. You could see that right here. Yesterday, not just this morning, but also yesterday morning and previously, I said we're going back to 180. And just in the last 2 days, since the alpha report I even posted yesterday, we were at 169. We're up $13, $14. And both days, you could look at this fact. I flagged Palantir is going up and Hood is going up. And interest rate sensitives is going down because the 10-year is going back to 415. All right, you gotta be part of this. You remember, every day before the market opens, I give you the trading perspective of here's where I think the momentum is going to be today. And you get that in the alpha report every single day that the market is open. It also gives us plans, for Fed day or afterwards or whatever, because it sets you up for trading on the day. Get that over at meetkevin.com. But anyway, there you go. See, there's the banner, the meetkevin.com banner. Well, we're ready to get all the courses, all trade alerts, and the live streams. Use that code Daddy's Back. Is it Daddy's Back or Daddy's Home? I can't remember now. It auto applies, I'm pretty sure, if you go to meetkevin.com. And if it doesn't, you just include it in. But it is not that one. It is, there it is. Daddy's Back. Okay. So what do we make of this? Well, the bottom line of this is we're probably going to see some sustainment of yields at slightly higher levels off of their lows for a little while longer. I think 415 to 420 is probably the range we'll sit in until we get some kind of devastating jobs data. Remember, ADP on the 1st and jobs data on the 3rd. Now, if we actually go look at world interest rate probabilities, and I want to see if there are any surveys out yet on jobs data, usually the surveys out on jobs data, they come out about a week in advance, but sometimes we get lucky and they can start coming out earlier. Yeah. Oh, wow. So the non-farm payrolls estimate currently is 25,000. That's really low. And the ADP estimate is not out yet. But 25,000 on the jobs report, that's low. You know, if that comes in negative, it's gonna suck. The last read was 22,000. You know, now and we obviously have to wait. Yeah, there are only a few estimates right now, so we got to wait for like, you know, dozens of more economists to come out with their estimates. But anyway, if you now go look at the world interest rate probability sheet, we are pricing in a 91.9% chance of a 25 basis point cut on October 29th. And we're pricing in what do we got here? 1.8. So about another 80% chance thereafter, after we get that 25, another 80% chance that we'll get a second cut December 10th. But that's it. We'll get 2 more 25s and that'll be the end of it. But Miran, unfortunately, he doesn't change anything for this year, but what he does do is basically say we're probably not going to go much lower than 3% next year. And so he does soften that a little bit. And I think that's a little bit disappointing for some. People were really hoping and anticipating for more aggression to the downside on rates. But overall, I have to say, for a Fed stability, like independence point of view, this was a great interview by Miran and or Miran, however you want to say it, and some people just say moron. But yeah, it gives us a little bit of perspective. Bottom line, I think, you know. Oh, he also talked a little bit about the inelasticity of tariffs. I thought this was a little bit more complicated, but a worthwhile argument to consider. He says the country that benefits from tariffs is the one that is more elastic, and the one that loses is the one that is more inelastic. Basically, it's a way of saying, if you're an American, you have a lot of choice in products and services, so therefore tariffs are going to hit you less. Whereas if you're a manufacturer in China, you have fewer choices to, you know, sell your wares to. You're kind of like only hoping to sell to America in you know, some specific examples, and therefore the Chinese end up eating the tariffs. That's his argument. It's an interesting argument. So again, it's an argument we haven't heard of before, and that's what he uses to say that, hey, we're not really seeing a big move in core goods inflation. This is debatable. You know, 2 CPI reports we were looking and we saw core goods inflation moving up at an annualized rate of like 5.9%. We always have to be careful about multiplying those monthly reads by 12, though, because, you know, 1 month doesn't make a trend, as we say. So there is some evidence to dispute what he's saying, but you know, broadly, are we seeing you know, a ridiculous explosion in inflation? No. Is it possible, though, that we would have had deflation or more disinflation? Yes. That's my argument. You know, if inflation right now is 2.5%, I think we would have probably been closer to 1% if it weren't for all these tariffs. So that would then give the Fed more latitude to cut more rapidly. See, the problem right now is the Fed can't cut more rapidly, because if inflation's at 2.5% and people hear the Fed is cutting like crazy, well, then you unleash potential inflation psychology, which then entrenches the very inflation you're trying to prevent. So, you know, unfortunately, it does put the Fed between a tough spot. But this idea that Miran was going to be a shill for the lowest rates possible is dead in the water.
Knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.